Good afternoon, dear colleagues. As always, Sunday, as always, Dan Strelkov is on the phone and the Forex Times project. Dear colleagues, I invite you to join us in the community for training. I will teach you how to look for the strongest levels and ranges of support and resistance, how to work from them, how to manage your capital competently. Also, colleagues, I'll show you how to find pure equity contracts or huge option contracts, which happen about 4 times per trading instrument per year. And since I use 9 trading instruments, that's about 36 trades per year. That works out to about 3 good trades per month. This is a very good indicator for both medium investment and speculative type of activity. Therefore, dear colleagues, please come to the community. You will not regret it. You will really enjoy it very much. Well, let's go. Today, we will consider the probable movement on the euro, dollar, gold, and Japanese yen. Let's go. The euro last week, as we had an increase in buyers according to the Commodity Futures Trading Commission, which means the trend is up, plus more buyers entered the market. So I predicted a likely decline to a strong support level in the form of the balance of the week and 132 million net option contracts. And from here, from this level, we buy the market. I decided a little differently. The market decided not to give us a good entry opportunity. I apologize. I showed it in the wrong place. It's right here. Of course it is. Let's have a corrective decline and buy the market. The market decided not to give us this opportunity. It simply decided to start growing steadily from Monday without any corrective movements. Dear colleagues, for the upcoming trading week, according to the data from the Commodity Futures Trading Commission, we see an increase in buyers by another 7%. However, the capitalization has decreased by 1% to $216 billion. I can assume that buyers entered the market for purchases, but the decrease in money in this trading instrument is likely due to sellers leaving the market and taking their money with them. Therefore, I anticipate the continuation of the growth of this trading instrument. However, we need to determine whether it's a strong range or level, and we have the strongest range of support in the form of the option level with their premiums and the loss level of market makers put contracts totaling $277 million. So, dear colleagues, if on Monday, Tuesday, and Wednesday we see a corrective movement in the range of 10831, 10840, we make a decision to enter the market for buying with a target up to the level of 112. Here we have 108.20, 108.30. Dear colleagues, only such a plan. If the price goes up during Monday, Tuesday, and the first half of Wednesday, unfortunately, nothing can be done. The reason is that the range between strong resistance levels is very large. So I tell you, yes, in this range, you can make a decision to enter the market for selling, but against the trend, and trading against the trend is not desirable, especially when we have an upward trend and we see an increase in buyers by 7%. Gold, dear colleagues, most likely, the strongest resistance level for gold at the moment is around the level of 2200, and the price has already tested it according to futures contracts. Therefore, in the near future, despite the increase in buyers by 45% and an increase in the capitalization of the trading instrument by 34% to $300 billion, imagine in 1 week, almost $100 billion was invested in gold. This massive influx of money into the gold market, despite the increase in buyers and capitalization, does not guarantee an immediate breakthrough of the resistance level at 2200. In fact, for 1 week, almost $100 billion was poured into this trading instrument. This growth has simply been insane. Therefore, dear colleagues, if we carefully examine the market structure on a weekly time frame, we will see a probable wave 2 and a probable wave 3. Why not 3, 4, 5, you might think, for the simple reason that most likely we have a triangle here, and a triangle is usually the penultimate wave. And if we see a 3-wave structure with a triangle, it is a unified structure in the form of a zigzag. And the triangle here acts as the penultimate correctional wave. Therefore, wave 3, followed by wave 4, and then wave 5, and only after that a correction. So, dear colleagues, at the moment, in the coming weeks and possibly 2-3 months, we will try to work on wave number 4. Why is it so important for us? The point is that if I am correct and we are witnessing the formation of a diagonal triangle, there is a rule in a diagonal triangle that wave number 4 must absorb the maximum of wave number 1. This means that the maximum reached by wave 4 must be overcome. Moreover, dear colleagues, triangles often respect their median line. If we draw the median line of the triangle, the price very often reacts to it. Now, let's look at the theoretical minimum levels and the theoretical level at the median line of the triangle that we could potentially work with. So let's draw one line based on the potential first wave and roughly draw the median line of the triangle. We have something like this, namely, please take a look at the level, approximately 2.78, which is the upper boundary of the probable wave number 1. Therefore, if we have wave 4, it should absorb this level. And further, at approximately the level of 238, I assume 240 is the median line of the triangle. So, dear colleagues, I assume that wave 4 will test the level of 240. At the moment, despite the increase in buyers, despite the bullish trend, I anticipate a corrective decline to approximately the level of 240. This is a significant level, dear colleagues. I recommended considering sales last week despite the increase in buyers and the upward trend. Why? For the simple reason that the price at the time of the last lecture was above the loss level of the market maker, which means that the market maker would likely lower the price during the week to this range. So, dear colleagues, we currently have an apparent impulsive movement. Our task is to wait for the end of the impulsive movement, then identify the correction and enter the market for sale, or within the range of 50% to 61.8% according to the Fibonacci grid or with pending orders. I will build an ABC correction or with pending orders at the base of wave C, sell stop, or at the base of wave A, sell stop. In this way, we can work on the further decline of this trading instrument. Dear colleagues, I would like to remind you that in the long term in this trading instrument, we have such a structure. Now I will show you such a structure. We have a probable triangle, a parallel channel. Most likely we will simply go to work on the median line of the triangle. As I have already said, the median line of the triangle is often worked out, and this level is 11020. If we turn, dear colleagues, to monthly option contracts, then we will see. Believe me, here you don't see it, but I counted them in the range, not at the level, but in the range of 110, 114. There are put option contracts for $6 billion. For $6 billion, dear colleagues, therefore, most likely, the price will go to work on this huge accumulation of put option contracts because you can see for yourself accumulations here like 128 million, 110, 149, 140, 205, 221, $6 billion. I can show you literally how we worked on it for 2 years. For example, the Australian dollar, when we saw the formation of a huge number of put option contracts, 2,682,000,000, 600 million, 640 here, 2 billion here, 1,900,000,000 here, 890 billion, and so on. And the price was going up. I said back then, dear colleagues, everything that grows, we must sell. Anything that grows correctionally, we sell. As it grows, we sell. And you can see where the price came after a year and a half, where these put option contracts were. I can show you such examples on every trading instrument, believe me, and on the euro. By the way, monthly option contracts, here you go. On the current trading week, when the price was here and then declined the next day, here we got at one level an accumulation of put option contracts worth $1.7 billion. And just below, at the level of $1.7 billion, what happened? The trading instrument updated the minimum value, made a false breakout, returned, rolled back to the 61.8 Fibonacci level, and started working on all the option contracts. In total, the movement was about 130 points. So, dear colleagues, to not miss such movements and for you to see these movements, and you can always open the reports of the Chicago Mercantile Exchange and see for yourself where the maximum price will move. Come to our community. I will show you, I will teach you, and most importantly, the cost of a lifetime subscription in the community is so affordable that after paying it, You will get a lifetime subscription to have me simply show you all these levels and write my forecasts, which you will read. You will see all these levels. You will see clean option contracts. You will see the main and strongest levels and the strongest ranges of support and resistance. Then all you need to do is apply a pattern for entry into the market within these ranges, make a profit or hedge your order with a stop loss level, take a limited loss and continue working, because managing capital and financial markets is the most crucial. Thank you, dear colleagues. This was Den Strelkov, the Forex Times Project. Goodbye for now.